Welcome back, and let's chat commodities now, where there's plenty happening in the agriculture commodities as well, especially spices, where you have seen the turmeric prices continue to decline, and yet another new kid on the block. Not new really, but it has been a relaunch of kinds, and pepper contracts are back on the exchanges for MCX and NCDEX as well. But after the launch, the first day of the launch, that is, has seen some bearishness come in for the prices. So we are trading 5.5% on the lower side for the futures contract. The spot markets have been under pressure as well, as the imports for the month of June from Vietnam have been up 106% year-on-year basis. So it's purely taking cues from the spot markets here. But talking about the futures contract, and remember, SEBI had given a nod for that. It actually has been a good last 1 month for the agriculture commodities on the futures exchange, as after Chana, we've seen the pepper contract being launched as well. Remember, it was suspended after quality issues in December 2012, and it has been quite some years before we see many of these contracts making their comeback on the exchange. Samir Shah, MD of NCDEX, now joins us on a phone line to talk more about that. Samir, hi, welcome. Another agriculture commodity is back on the futures contract. What is your sense? This actually is a good time. There have been a lot of issues, of course, given on quality and prices, and that is the reason we saw those couple of contracts go out or being suspended from the exchange in the first place. Would you say that the things have gone better now?
Yeah, no, it's absolutely a good sign. What it has done is that it has forced, us and the whole market and the whole ecosystem to strengthen systems and processes. So, every issue that we've seen in the past has forced us to reflect, look back, because the market is complex. We are dealing with physical commodities. It's not like securities where, these are physical commodities that have parameters, that have attributes that deteriorate and change over time, and getting them right takes a lot of hard work and a lot of effort. So the fact that we are using these experiences to make the system more robust, that the regulator is forcing us to think about these aspects, is, I think, great for the market, great for the ecosystem, great for the hedgers, and I'm actually quite delighted that these commodities are coming back after having gone through a rigorous due diligence, both internally as well as with the regulator.
Samir, are we looking at further contracts being launched today? I mean, one just tends to get more hopeful. I mean, markets have been asking for more pulses, more spices, perhaps potato making a comeback as well. There, of course, has been market talk on that. Would you say that we might see a comeback of many of these?
We are definitely looking at more agricultural commodities. Definitely more in the context of commodities that were successful in the past. So I think there is a lot of potential just to reactivate some of the previously successful commodities, because there is a genuine need for these commodities. As far as tapping into those that have never been launched, we are taking it one step at a time. As you know, this year we've launched a lot of commodities that have never been traded in the past, like RM cake, like degummed soya oil. So these are, first time completely new commodities. So we continue to have a mix and balance between those that were available in the past, but for whatever reason have gone out from the system. We are looking at getting them back because they have very strong utility with farmers and hedgers. And we are also, where it makes sense to strengthen our existing product portfolio, looking to strengthen and complement our existing product portfolio by adding, missing parts of that portfolio.
Samir, coming on the quality part yet again, because when pepper was suspended, or you had to do that, it really was about quality issues, FSSAI coming in very strongly into the markets as well.
Yeah.
What contract specification changes are we seeing at this point in time? And would you say that delivery of many of these agriculture commodities, the contract specifications, quality, etc., is taken in cognizance now?
Yeah, so that was the big lesson that we had when the black pepper contract got suspended in 2013. Immediately after that, we included FSSAI parameters into our contract specifications. So for those contracts that were available after black pepper was suspended, have been incorporating the FSSAI specifications right from that point in time. So a lot of those quality issues have progressively, gotten addressed and gotten sorted. Black pepper has got sorted now because it was just relaunched after 4 years plus of gap. But what is more important is the quality consciousness that this has introduced in the value chain. It's not just about, because NCDEX prices are a benchmark price, and NCDEX quality becomes a benchmark price in the physical markets and the APMCs. So the moment we raise the quality standard, the quality awareness just percolates through the system, and that is one of the best things we are seeing. We are seeing farmers becoming more aware of quality standards. We are seeing traders becoming more aware, more demanding of quality standards. So I think in general it has a ripple effect in the value chain, which is becoming more and more quality focused as enforced by the NCDEX specifications.
Point is well taken. Of course, we'll keep touching base with you, Kishore, Samir, on what really is brewing ahead in case of the agriculture commodity trades going forward from here. Well, that's about pepper. Remember, it, as Samir was pointing out, has been a big learning experience, and the FSI specifications have been now taken into contract accounts there. But Kishore Narne of Motilal Oswal Commodity as well joins us to talk about that. Kishore.